The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday, the 17th of January. Wow, it feels like January's already we've been doing this for quite a while, but it's only 17 days and a lot less in terms of actual trading days. Now, let's do a couple of things here. Number one is Technical Friday, where I do a lot more based on the Chapman methodology. So let's do this. I'll run the numbers and we'll go through a bunch of things, and I just want to get out of that. There we are. Okay. So we've got the Dow at 43,490, 41,844 was the low on Monday morning. Well, that was the Friday was a low. Thursday was another low. Another question came in when I was discussing this with Jacob in my interview on Tuesday. I said, if there's a V-shaped pattern, that's the best that you can get, because there's no time. Every time you want to get in, the market just gets away from you every single day for the next few days. That's that V shape. But if there is a reversal, and you remember I'm pointing to this candle right here. Let me get the arrow. There it is. I'm talking about that there. That if there's a reversal, then you're starting to see something that I can only call a low. I can't call it the low. I still really can't call it the low because the stochastic has to get up into the 80% or higher area, and it's only at 72% right now. The MACD is good. The retro strength index is good. And the 9-period moving average as of now, which is less than an hour into the trading session, the 9-period moving average is cross positive. That can change by the end of the day, but that is a really good sign. Now, that would suggest that at the end of the day, I can call this a buy signal, and now we have to get an update for a buy mode. I just wanted to go through that. That's the daily chart. Weekly chart, what a fantastic candle that is. And look at the 9-period moving average, which never went negative, even though the Dow dropped right underneath 42,000 twice. And now it's above it. So that's a really good turnaround. It means, it usually implies that there are a couple of more bars to go to the upside with higher highs, but that's a weekly chart. I don't want to get into that right now. And then on the right is the monthly chart. We've just started a month. It's got a whole month in which to try to tackle the 45,073 all-time high. That's the Dow. Let's do this. I'll do this actually with each one because there's nothing to do. A very strong move to the upside, gapped up. And we'll have to see where we close. I've got a feeling that as we get closer to the end of this first part of the morning, going into 10:20, it's another 12 minutes or so, we're going to get a really good sense of whether there'll be a minor pullback and then a close at the high of the day, or whether you'll just see a lot of folks saying, let's just wait until next week. Let's just wait. And, of course, if they've been waiting since Monday, they're still waiting because every day has just been very strong. Yesterday was a fabulous digestive day. Look at this. The S&P made a higher high yesterday and is gapped up, and it's right at this, what I call the Chapman Wave Inside Track repellent line. And I've just decided over the last hour, I've been wanting to do a webinar. I always do that at the beginning of the year to say, where are we and what are we doing? We've already done that for subscribers. I've said that the positions that we have, I love the positions that we got earlier on when I did my last webinar. We were in many of them. We've added to some of them. I want to broaden out. I see us going more into the commodities area now. A lot of things are going on. Energy is actually, XLE is doing very nicely. So as I'm looking at this, I'm thinking, I usually do an hour or so webinar called the Overview webinar for subscribers this afternoon. I'm going to make it almost like a not just a video, overview video, but I'm going to make it almost like a webinar. I don't know if I'm going to have time to do one in the next week or so. So, and there I'm covering a ton of things. So I'm not even sure it'll be an hour. It could be an hour and a half. And it's just for subscribers. So, you could be part of that webinar. if you subscribe, you'll then get all my other webinars and all these different techniques. And it'll also be an opportunity to at least try my newsletter, because we've raised cash. We've been starting to put it to work. We bought the Dow low, the exact low on Monday morning. We've added to different positions, taken a little bit off for reward. I mean, that's what I like to do here. Take a tad off to reward yourself, to say, hey, that was good. And on the next big pullback, we'll be adding a lot more, but I'm being very patient. All right, now as we look at, so the video will come on. I'm not going to tell you the time, but I'll do it as soon as the market closes, and I'll set it in place so that it's there this evening, and you'll have the whole weekend in which to look at it. It's not going to just be overview, because there are a lot of stocks that I've liked, that I've discussed. That the best usually is when I get these signals, it's just to go into everything, and then you sit there and you say, okay, let's see what happens next, and you don't have to do very much, but it isn't quite the way it works, because different stocks are doing different things at different times. All right, so with that said, S&P is bumping up against this technique that I call Chapman Wave Inside Track, repellent zone. If any time from here on, there's a close above 60.20. So 6,020, we're at 59.93 right now in the S&P. That breaks, it's a declining trend line, but for now, the actual trend line number today would be 6,013, and then it's a declining one, so it'll be a little lower on Monday. All right, so we've got that out the way. QQQ, the index 100, broke that trend line resistance. We're above it. Today's young, so red candle, even though it's up 744, because we're at 520.53 on the Qs, but we actually hit 523.04. So we'll see what happens with the rest of the day. Weekly chart, 9-period moving average has held. The price went under it. Now it's way above it. I think we're going to I'm going to draw this in here, a potential cup formation in the weekly chart, and that could take us to about the end of January, the beginning of February, if we can break 625 on a closing basis, 628 on a closing basis anytime between now and next week. The 539.15 all-time high will become a target. Let's go to IWM. It's a little different with the IWM because it got hurt really badly. It went from 244.98 double top. That goes back to the 244.46 high of 2021 November. And we made a peak D, but look how it's holding. That last peak D was holding very nicely that's back in November going to December, January. And then it just started, the 9-period moving average on a monthly basis just kept going lower and lower and lower until it crossed negative. Are we going to see that again? Well, we don't know. But so far, you see that red candle, Chapman Wave inverted red Roman candle? That was the high of November 2021. Once you start closing below it, it's really poor. Once you have also failed to go to halfway of the wick, which have been at about 237, instead you kept going down. That's very negative. Here, we're already into the body of this big red candle from December. So that's a positive so far. So you're into a resistance area right now. The IWM is up $1.33, 255.82. I'll be right back. Basil, Chapman, Tiger Ignitions Hour on the 17th of January, Friday.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Good morning, everyone. We're back. Let me just put this little mouse here. Oh, got it already. Okay, so we're looking at, so this is the E-mini made a peak E-top in the 10-minute chart. Look at this fantastic to a 914 technique. This is Technical Friday. When it crossed positive right there, 3:30 this morning, it just stayed positive and it's still green. Going against that on the 10-minute chart is really tough because it's walking the 9 period. It's not even walking the 14 period. It's hit it once since 8 o'clock this morning. This is a 10-minute chart, and it keeps walking to the upside. So it means that you have to look at a shorter time frame. The 5-minute chart has this U-shaped pattern trying to get back to the high of 6,035.50 that was made at 9:30. It's peak A, peak B. Will it get there? We'll see. It's walking the 9-period moving average. And the 1-minute chart says it's struggling a little bit to keep going higher because it's had a huge move up, so it's just digesting gains. All right, let's get back to our story. And the story is that Bitcoin now is up 4,145 at 104.8, 104,000. 860. It's going to be very difficult to keep saying that. 100 and something thousand, and then you've got to give the hundreds. Anyway, so this is looking fabulous. A very nice low that was made at 89,525. And here we are at 104,828. A lot of talk of the in the Biden administration, in the new Trump administration coming up about Bitcoin, and it's looking very favorable right now. We've been long for quite some time. We've been long since over there, right down there. That was around about October, and it's doing very nicely. So that's Bitcoin. I want you to just finish up because I think I just touched gold. Yeah, so gold is doing very nicely. So I love these rectangles. I was talking about my video, my overview video this afternoon that I'll be doing for subscribers. But if you become a subscriber, you can always cancel after the first month. You don't like it, you just say, hey, you just call, you cancel, and that's it. In the meantime, you could go into these webinars. I have webinars on these particular techniques, and this technique here is the, let me just get to it right here, because I had to redo these the other day. Something happened, but I did it. So I have a whole, I often talk about this in any webinar that I do, but had a special one on the rectangle, narrow rectangle and the large. The characteristics of the rectangle formation, the long, narrow rectangle, that's what you very often see at night after a big move up. The futures can then go and trade in like a 7 or a 9 point range all night in this long rectangle. I have a particular technique that you can use. And then the large rectangle has something else where it can come sharply lower, make a big arch formation like an H, and then fail, or it comes down, then starts a stair-step move up to the top, which takes you to just under or just above the previous high. That's the major high. And then you got to assess in certain ways. Well, here it is. There's your U-shaped pattern. It's not quite the higher highs and higher lows. It's really more like a U rather than the arch. And if we can see the gold, and I must mention we are long gold subscribers to the opening call. If we can close above this high of in the continuous contract 2761, I would have to put it into the close above 2763. I want to see it nicely above. That would be a very good sign to say now we can start to tackle the high that was made back on the 30th of October of last year. In the continuous contract is 2825.9, but of course that gets smoothed out. That's why my letters, which are not automated, they're done by hand. Every single letter you ever see on any one of my tens and tens of thousands of charts, done by hand. Done very quickly, but I do it by hand. Okay, so that's where would support be? 2720 to 2700. That should be key support if there's a sudden slide. I'm actually looking more at the dollar as being a little toppy, even though we've been long the dollar since 2018. I'm looking a little bit pulling back at a peak F. I think the dollar is ready for a rest. It's a leg C. I think it'll make a peak C. A little later on in the first quarter, we'll go to a D, and I don't know yet whether we're going to go to the 114.78 September of 2022 high. Is that still the same number? It's probably changed. 114.78. Yep, it's the same number because it's a dollar index. Okay, good. And you've got a Chapman wave inside wedge resistance level. It went right to, and now it's pulling back. Yeah. So the dollar looks fabulous, but it can have a bit of a breather. So let's do this. We did the dollar. I'll do the EUR-USD. That's the euro-dollar currency pair trying to rally. Not doing very much, but this is where it should start to attempt a rally, 1.03. It should, if it can get even tag 1.04 at any time next week, that'll be a good sign for the euro, because at the same time you're looking at the USD JPY, and I've been saying that it's looking a little tight. It made that peak G/C. Looks more like a G to me, right there at 158.88 on the 10th of January. And here we are starting to pull back a little bit. Today, the 9-period moving average is crossed negative. We're not even an hour into the day. So all I can say, you have to wait for the end of the day to see if that's going to cross negative. PC in the weekly chart, I do believe we should go to a D at some point, but let's do one thing at a time, shorter term. So gold, I'll go back to that and say gold is up from the low. It's at 27.47, just down 3 points. Silver, this is interesting. Look, silver, slightly different pattern. And that's what I've been saying. The way the markets have been moving in each sector, you've got, for instance, Microsoft's holding very well now, when all of a sudden Apple's starting to pull back, and this is the Mag 7, are they? And so the same thing in the currencies. You see that the dollar was doing much better than the yen, but then they both pull back in unison. But the euro hasn't started to rally. So now we've got silver just kind of stuck. Not doing all that much. It needs to get to the 32.58 level by next week. It definitely mustn't break below 30.35. So that's that high-grade copper. Whoa, high-grade copper is pulling back today after that fabulous move from 4 all the way to the 4.47. Oh, that's very nice. I've got this a brand new leg B. And that's a very good sign, because finally the weekly chart, I don't care where it goes from here, but the weekly chart, and we have to wait for the Friday close, but the weekly chart is saying that the 9-period moving average finally is attempting to cross positive and the MACD is very close to turning positive. This is a weekly chart, and that says to me, keep high-grade copper on your list because it's starting for the very first time to show some sign. Let's look at SCCO, right there. Yeah, it's the same kind of pattern. So it is a good sign, but nothing great. FCX, same thing. FCX is a slightly different chart. It's bumping up. I had this as trying to test the left side high with a price time match from the 17th of December of 40.79 by tomorrow. And today the high is 40.81, so just beat it by 1 day. This is a Chapman wave cup formation going with an inside track target repellent line, and there it is. We hit it exactly. Very nice. So I'm anticipating we're going to see some kind of tiredness now between 10:20 and maybe 12:45, and then we'll have another part of the day to talk about. I'll be right back. Dow is up 304.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, just checking here for a couple of questions. Yeah, I have to get to these. Already show another one. Hi, Basil. Happy New Year. Enjoy your show very much, and thanks for your thoughts on the markets. Would it be well, back to you. I haven't seen who it is yet. Would it be possible to take a look at AMD? I would like a new buy and hold entry. I missed NVIDIA, and I feel that this one might have a better percentage potential at the moment if it makes a good low. NVIDIA seems to toppy to my eye. Do you feel that it's best to wait for the semis in general? Would you look at each chart on a case-by-case basis? Any advice you can offer on a safe entry would be great. I was hoping it might tag the 65s, but that seems unlikely. So perhaps it finds a bid here in the 121 area. Wow, a big difference between 65s and 121. Thanks, Basil. Hope to hear your thoughts, Chris. So, Chris, this is what I'm looking at here. So, actually, let me just take it in line. First, the one I was going to do was, the question was, is there still that relationship that you see between Robinhood and regular investors in the brokerage area and the Bitcoin? And the answer is yes. So let me just show you. So here's Bitcoin, coming back to the advanced market devices in a moment. Here's your Bitcoin. I just want to go in order. So the Bitcoin is having a really good move from that just about 90,000 level to 104 today. And if you look at Robinhood, so we are long Bitcoin. I just wanted to mention that for some clarity there. And Robinhood is at an all-time high right now at 47.44 in a leg C in the daily chart, leg E in the weekly chart, and the target that I have of 47.88 for December, which at one point I thought, oh, you're nuts. What are you thinking there? This is a technique that in my webinars, you'll see the technique, left side, right side, it's called price symmetry. Look, I chose that particular bar, not the all-time high of 85 round number high, but the first candle after that had a high was at 47.84 back in September of 2021. So I took a measured move at a particular candle that I use for a midpoint, a potential midpoint. We don't look, this is years, so it's a potential midpoint, and then I can confirm it if I get a Chapman wave inside wedge target repellent line. That's this dashed gray line right here. Oh, I forgot to make it dashed, huh? Dashed line, and that said by December of 2024 into the first week of January 25, and this goes to right here to January. This goes to January, the left side, right side price time match. There should be a test of that 47.84 level. Well, we just did it. So all I can say is, and if you look at the Bitcoin, there's no relationship in the sense that how can you do it? Well, I had a left side, right side price time match for Bitcoin as well, back from the 2021 high, all the peak D, all the way down to the low. I think it was January or so, December 2022 or January 23, going to a high early in 2024 to test the high that was made right there, and now November 2021 of 80.55, and we did that. Then you made a carp and a handle pattern. Oh, this gets smoothed out. That's why it slipped down. That should have been there and there. Okay. And then what happens is it made the handle. So we bought earlier on, we had a fantastic run in the GBTC, which is the Bitcoin fund that went from the 12s. We had two positions, actually, a short term that I thought would be out quickly and a longer term. And we held them both. And then finally we got them out, and we were out way up here in the 60s, right? No, GBTC. We were out here in the 50s back in early 2021. And then look what happened. Makes a cup, and then there's a handle. So let's just go to the Bitcoin, because I was using the futures as kind of the benchmark for what we were trading, which is the iShares for subscribers. So we waited, we finally got back in. We got back in for the handle part of this cup and handle, and it screamed to the upside to a leg D. Maybe it's a peak D, but so far it's a leg D. And the relationship there is that IBIT, which is what we went into, because I thought it had all the veracity that I was looking for a position. And so this is brand new right there, A, daily A, and it's in leg B. you can see this is the handle part. So it's done that. Now it says B, but that's not right. That's just B because it's from the IPO of this particular instrument. That's actually a D in the Bitcoin, right? So that's what we've got. We are long. We've been long from right there. That was in early November, the beginning of November. This is a brand new position that we've had. Taking a little bit off, but it looks very good. So the relationship there was, then we go to the Bitcoin. And if you are looking at Robinhood, it's just got this huge cup formation in the monthly chart. So, yeah, so the question was, is it too late to get in? Oh, man, it's so tough. If I'm looking out and we are now, it has an all-time high of 85, round number high on August, I would do this. If you weren't prepared to get in before, every time it rallied, it means that you were a little afraid to dive in, and that meant that the stop that you would have put in was too much for you just didn't want that. And then it went up and up and up. For me to now tell you to say, here at 47.47, just grab an entry because I see it going much, much higher. What if it pulls back from 47 and just kind of fills in this breakout pattern and goes back to the 40 level? That could be anywhere between 12 and 18% or 20% risk. I can't do that. So what I'm going to say to you is, if you use options, you can go out with an option. I'd get a 45 option. I'd go out to January. I'd go out to maybe March, and I'd say that's the premium, and that's the exact amount that I'm prepared to lose. But I know that if everything works out, it should make up the premium and then make a profit for me at some point if the technicals, which are very strong right now in the monthly chart, continue to go higher. But I'm sorry, I'll be back to you with this, and just give me a reminder, Chris, when you want me to on. No, it wasn't Chris. It was Joe. Joe, if you want me to. On what to do. Now, if you're now saying, I like what I see, and you're doing some independent work, and you say, I'm prepared to put up with, say, a 4-point stop because it should go higher, I'd say, you have to now make a much smaller position. This is money management. So the position you would have had is just out of question right now. It's not a full position. It's not a half position. It's just putting your toe in the water to really get a feel for what it's like, how this Robinhood responds to market veracity. So that's all I'm saying. 47, right? 54 right now. Personally, I would not have more than a 46.10 stop, and that's a good. I would much rather wait, even if it's a few weeks, for a good pullback.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Dow's up 385, S&P's up 59. Fabulous follow through. What a week, beautiful week. Days young. Only an hour, not even an hour and a half into the session, but so far so good. 227.30 was the high in March of 2024. 227.30 was the peak C, and this is one of those where I said I'm calling this a C, but it's really unusual to go to all-time highs. There's no other way I could count it unless this was a fake bottom over there. That becomes A, B, C, D. Usually D's or higher are certainly at all-time highs. You just hardly ever see that. Of course, it fooled me at a peak C at the top on the Dow. Didn't go to that D, but the S&P did. Everything else did. So that was a failure pattern. And a failure pattern usually says that it's going to go all the way back to the low. But in the meantime, look at the 200-period moving average. You can hang around the 200-period moving average for a long time, but when you break above it or below it significantly, you can stay above it for a long time, and that's what's happened. So now the 9-period moving average on the weekly chart of advanced micro devices has been pink, but we've tested for 2 weeks now. We've been testing quite successfully exactly on the 200-period moving average. The MACD is still weak. The histogram's just improving a little bit. The on-balance volume's flat, not going anywhere. Stochastic's very weak at 9%. So the technicals are not very strong. So this is what I'm going to recommend to you, because the semiconductors, there is a story that's still in play. SMH, if you look at the SMHs, just going into a rectangle formation, but not breaking out to the upside, not breaking down. Look at this rectangle, mini rectangle within the larger rectangle. I'll talk about rectangles and the E-mini in a moment to show you the exact thing in real time. So I'm going to suggest to you, you've waited and waited. You wanted much lower prices, Chris, but this is what I'm going to recommend to you. At 121 right now, it's filled the gap from a week ago, but the 9-period moving average is still very weak. I wouldn't be in a rush to do anything other than, and this is just for your, just to get a real sense of how advanced micro devices is trading within the SMHs, which is it's trading very weakly right now, and how it responds to holding gains. It hasn't been able to hold that at all. So since you've waited this long, I'm going to suggest 2 things. One is just nibble. When I mean nibble, I just kind of get your foot in the door at 121.03, and even this will have a stop below yesterday's low. So it's just kind of It's like a feeler. I call it a feeler entry point, where it just gives you a sense of, now I can add, I better get out. Or I don't want to touch it. So you can either do that. You can do it physically by putting in a bid, or you can just write it on your piece of paper, 121.05, I'm long, and I've got to stop under, it's way too much, 3 points. I wouldn't even give it 3 points. But it's a feeler position. Just for now, let's make the stop 190. You're at 121.03, takes out 119. That's just not very good action, right? So what you want to see is next week somehow it tags the high that was made on the 8th of January of 125.30. You want to tag it, then pop into the gap, and then hold into the gap. So you're holding above 125.75. Any day that it closes above 125.75, now you're looking at something that says, aha, now the technicals should start to improve a little bit more. And then we have to go from there. I don't think you're missing anything if you actually got it in bought strength. But weakness has said you're buying on the dips. It just keeps making lower lows. So a nibble here at the 121.0205 area with about a 2. I don't see why you should go. It's up 258 today, so give it today's low is 120.55. Make a stop of 120.20, and that would be just a nibble position, because if you're going to get into a position, this thing has a lot of work to break above the 200-period moving average. 127 is the resistance at the pink 9-period moving average. It's a start. Not my favorite position, but I understand what you're saying. But there are stocks. Look, Taiwan Semiconductor, TSM. Taiwan Semiconductor is trading at 213, nearly double the price of advanced micro devices. There's a chance that it made a double top at 222.20. A week and a half ago. Yesterday, the high was 221.95. We've seen these double tops become much more important. So that's what I'm saying. I think that the semis are telling us that they're kind of in play in the sense that they're holding, but they're not leading anymore. The leadership has been rotating, and now we've got, let's just see what Caterpillar's doing. Caterpillar is up again today after hitting its 200-period. You see how you want to take off from the 200-period moving average? Once, twice, boom, I've had enough. It's like an electric shock. Boom, you move to the upside. 9-period moving average crosses positive. So this is a much better situation. Okay, and I'm just saying that there's a rotation going on. That's why the Dow is finally doing very nicely. Okay, that was advanced micro devices. Okay, a couple of other questions. Let me quickly look here. Yes, so as I say, this afternoon, after the market closes, I'm going to do a video. It's going to be not just an overview. There are stocks. There are a ton of stocks. For instance, I've liked Uber for a long time, but we haven't got Uber. I've been waiting to get in. Here it is, holding on the 200-period moving average. I like the story. I like something that is the ice cutter, the initiator of a whole segment of riding Uber tech, food delivery, all sorts of things like that. It hasn't done very well since it's made its most recent high at the 87 round number high in October. 87 round number high with an 82 round number open, but has plummeted down all the way to 59.33. So there are a lot of stocks, and you can make your own decisions about it, but I want to go through some of them, a lot of them actually. And it's going to be more, it's really going to be like one of my webinars that I have. I just don't know if I have time to do it in the next week or two, but I'm going to do something tonight like it. So you can sign up. In any case, if you were going to do my webinar, you have to sign up, get a month's free. You get a month's subscription, which is refundable. So it's a good opportunity. Okay, so the dollar, I want to see how much it's pulled back. People were saying it's taking a dive. I would not say down, unchanged right now at 108.96, but I think that the dollar is in. Look at the 9, is still very strong over the moon. Here's your trend line support. Sometimes it's a waste of time putting in these up ones because you've got the black 14-period moving average, which is telling you that's really important. But if it goes under the low of 3 sessions ago, 108.6, no, 108. If there's a close under 108, going into Wednesday of next week, the dollar finally is taking a bit of a breather. Weekly chart's still fantastic. Let's see what gold's doing right now. Gold is unchanged. Yeah, you see there's a bit of a ratio. Oh, so there's the cup, the rectangle with the cup formation, and here is the rectangle with the arch formation that walked the 9-period moving average, and you've got leg D in the 5-minute chart. Isn't that amazing? Leg F in the 10-minute chart.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th, for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so let me just show you this. There's so much I wanted to do, but anyway, running out of time. Check out my service, service. I'm doing two things at once. My opening call, and I'm doing a video as I do every Friday or every weekend. I certainly try to get it on a Friday, and it's going to be more like it's not going to just be the overview. I want to look at stocks. So let me just show you this. I spoke about this before. So I spoke about the rectangle. I've got webinars based on those two patterns, the narrow rectangle and the wide one. So I have to always put the arch formation. If it goes straight up towards the left side high, I have to put the arch. This is the 5-minute E-mini. But look how it's walking the 9-period moving average. So it went up to a D. What's the rule of this? It can go to just under, right on, or just above the previous high. And then if it takes out the halfway marker of the rectangle, in other words, at any point in the next, I'd say hour, if the E-mini goes under 6,000, 636. If it goes under 625, then probably it's going all the way down to the 620 to 610 area. But at this point, it's still in a buy mode in leg D. Leg F could even be an alternate count in the weekly. This is fantastic action. So that's the reason why I said to subscribers this morning, yes, if we make a new higher leg B in the Dow today, we don't have to close above it. We just have to make a leg B above the high of 2 days ago. It says, yes, this is a buy that dips right into next week because I'm anticipating it should go to at least a leg D. In other words, you're in a buy signal. Have to wait for the end of the day to actually confirm that, put the up arrow in. And that isn't yet a buy mode because the stochastic has to get to 80%. But so far, this is a really good action. And that call that I made on Monday early in the morning, I thought about it. I said, I've just got to go with it. This is a buy. We're going to give an add-on buy to our positions in the Dow and add on to other positions. And I think so far that this is showing veracity, that it has some strength to go into next week.